Welcome to the Claims Underground podcast with your hosts, Corey Locke and Troy Willis, where we help policyholders just like you understand your policy and how to navigate through an insurance claim. We advocate for homeowners as well as businesses when insurance companies won't pay. So if you're tired of getting the runaround and ready to find out what's really going on, then let's get down to business and learn from the insurance claims experts, Corey Locke and Troy Willis.
Good afternoon. Welcome back to Claims Underground. Today we have a special guest on our show today, Amy Bach. We'll be talking about the current California home insurance marketplace, being California Fair Plan, and we'll have her give a little bit of information about it so we can get a better understanding of what goes on. My co-host here today is Corey Locke. A little bit about ourselves. I'm a retired builder. I'm an expert witness. I'm a certified umpire and appraiser and a licensed public adjuster. And Corey, you are?
I'm Corey Locke, public adjuster, also 35 years as an insurance adjuster, independent adjuster, large loss carrier adjuster, and now public adjuster. And I've been an estimator in property for 30 years. I'm also an expert witness, appraiser umpire, ACAC smoke and fire consultant, and also triple mastered IICRC. And we are so excited again to have Amy Bach here from United Policyholders. Amy, please introduce yourself.
Pleasure to be with you. I'm an attorney. I'm the co-founder of the nonprofit United Policyholders. I came out of working for a consumer protection agency in New York, came out California to get a law degree, co-founded United Policyholders after being a bad faith lawyer, trying some cases, and very, very happy to be with you today. United Policyholders, very I would say, involved in monitoring the California insurance marketplace and the FAIR Plan.
What would you like us to know, our viewers today? What would you like us to know about this California FAIR Plan? I know a lot of people, even yesterday, we were at a meeting and I was giving a speech yesterday, and people don't know what California FAIR Plan is. So this is an opportunity for someone else as yourself who's very much involved to give them an idea of what this particular coverage is about.
So the FAIR Plan was started in the late 60s when inner city residents in LA were having trouble getting insurance because there had been rioting. And so the legislature created something called the FAIR Plan Association. Fast forward to today, so it's an insurer of last resort. If you cannot find insurance in the private market, no one will sell you a policy. You have a place to turn to, the FAIR Plan. And today, the vast majority of the policies that are the homes that are insured through the FAIR Plan are not in the city. They are in the country. They are in the WUI, the wildland urban interface areas where the wildfires are a fact of life. So today, I think there's the last count was still under 300,000, but it keeps on growing because when there are more and more areas of California that brand name insurance companies are pulling out of, that they are non-renewing. And so very often those homeowners that get dropped cannot find another option other than the FAIR Plan. So it's a very important last resort backstop. But the policies they sell are very limited coverage, and their claim handling needs some improvement in general, I'd say.
It's my understanding that the FAIR Plan is a collection of carriers that all participate in that. But I think the participation is monetary, isn't it? Or do they provide staff?
So it's large. So if you are State Farm and your market share in the voluntary market is, let's say, 40%, then you have to participate in the FAIR Plan. That's the way it works. And you have to take 40% of the losses that are in the FAIR Plan or responsibility for those. So the as far as who does the adjusting, um, it's generally is going to be independent adjusters, not going to be staff adjusters. But the insurers do have to pick up the cost, again, on a pro rata basis, for those adjusters. So, and it's the governing committee, pretty much runs the show. And the governing committee is made up of insurance company executives. There's like a one public member. They've asked me if I would be that member, and I keep on telling people to remind me to say no, but I keep on thinking maybe I should, because more and more people are going to be insured through the FAIR plan, and they have a lot of work to do.
So the FAIR plan has your market share determines your responsibilities, your liabilities to the plan. Do they also have the benefit of profitability as well? If the plan makes money, that they make the profit?
Well, they in fact, although the FAIR plan is supposed to, they have the ability to do assessments on their members instead of raising their rates. They have chosen consistently to just raise their rates, and in fact, they paid the member companies a dividend not that long ago, and keep implementing rate increases. So their policyholders are the ones taking it on the chin, and the participating insurers are keeping it running the way they want to run it, pretty much.
So that they are basically raising their rates, but also taking dividends and sharing that with either with their stockholders or whoever. So it's basically a profitable margin for them.
I mean, I don't know, honestly. I think it's been a while since they took the dividend, but I know that they haven't done an assessment, and I know that they've had a rate they've had a rate increase pending with the department for quite some time. It's been sort of a tug of war, but I think most people feel like they're already paying pretty hefty premiums to the FAIR plan.
Right.
Yeah, one of the biggest problems is they don't have a lot of staff. The
No.
FAIR plan. It wasn't built for what it's doing now. It was not.
So when we're now at 300,000 policies, and now pretty much everyone that lives in the mountains is being told, we're going to split you off. You're going to have a difference in coverage, the DIC policy, plus of the wildfire policy that through the FAIR plan. The costs are not going down. I'm seeing clients of mine that are saying, I have to re-renew, and my fire policy alone is $5,000, and my DIC policy, the split off policy, is an additional $1,300. And this is just people that live in the foothills. They're not deep into the mountains, and they're paying $6,300 a year as retirees for just insuring the most valuable piece that they have in their portfolio. So
yeah. It's kind of brutal. I mean, for these fixed income people, they really are between a rock and a hard place, especially, I mean, if they have a mortgage, and if they don't have a mortgage, I mean, and that a lot of people are dropping coverage, which is bad, right? I mean, Greenville, Grizzly Flats, we're seeing a lot more people who don't have insurance after wildfires now.
Wow.
We had that question yesterday, Troy, and I was going to raise that again. Remember in our meeting yesterday, they were saying, is it only the FAIR plan? Is that all we have as the availability if they don't want to insure us? And in our meeting yesterday that we had with some investor people that had multiple properties, my suggestion was start with your mortgage company. Your mortgage company likely has a relationship with some insurance company. And I speak from experience because I worked for one of those force place carriers for 14 years. So the force place carrier has come down in price, and yet they take all perils. So perhaps even if you can't get insured appropriately with FAIR plan or cost wise, or you have to have a split off, if you talk with your mortgage company, they will likely have a relationship with a bank that takes on their force place policies, and they will insure it for the entire amount, for wildfire, for everything. It's a all-in-one policy. So they don't.
That's so interesting for you to be saying this. It's fascinating because we're always we've been always trained. I mean, as a consumer advocate, we always say, forced place policies are a ripoff. They're so expensive for what you get. But here you are saying that they might be actually something people should reconsider.
If you're already staring down the gunnels of $6,300 for a split off policy, why wouldn't you consider $4,500 for a forced place policy? Yeah, it has a lot of limitations, but if you're paying attention, you can add on ALE, you could add on liability, you can add on for contents coverage, you can add on for code. These are all options that you can add on for. So with that being said, the pricing is now becoming very, very competitive. So price wise, and just from the sense that you're actually going to be dealing with an insurance company, not just a brokerage and independent adjusters and no one to take responsibility for what they're doing. Yeah, you're going to deal with independent adjusters, but actually with the forced place policies, and those are just basically two different companies that do that, you're going to find out that you're going to actually get coverage, and maybe it's for less, but you're going to maybe have an alternative that no one's talking about.
Corey and I had a claim down in Los Angeles with a forced place policy with a client. And actually we ended up making her whole down the line. I mean, we would have wanted more based on she had multiple claims.
Yeah.
They end up rolling it all into one claim in the end, right before litigation. But we did actually succeed in bringing her a pretty large settlement in the door for something that, again, that was off a forced place policy. They definitely have benefits, like as Corey spoke, when you don't have any insurance whatsoever. Some insurance is better than none, and the fact that you can build them with a little bit more dollars, again, some policies is better than none. I mean, I'm not going to knock the Fair Plan, but Fair Plan has a limitation as well of how much coverage they're going to offer as an overall, which we've seen is hurting a lot of these customers, especially with these wineries and large properties that they just can't get no more than 1.5 million total. Which is, not doing them any good. I got a client right now, got 800 trees on his property. The PG&E cut down, and there's no money to get them off. And he's lost millions of dollars worth of property on there because his policy is so limited to what it is. And sometimes that forced place policy may be a better policy than the marketplace policy.
So interesting. I'm so glad we're having this conversation. United Policyholders has done 4 shopping help webinars over the last couple of years where I bring a panel of brokers in agents and brokers I try to get. I have one from the North Bay, one from the East Bay, one from the South, and somebody from the Department of Insurance. And no one has brought up this concept of the forced place. But I have gotten a lot of reporters asking me, well, what do people do if they can't afford the policies that are offered to them? And I said, well, they can let their lender force place. And now you're making me think we got to research this, because if that's true, because the relationship, like you said, the forced place carrier has a relationship with an insurer, and that's important, right? As we know.
We know for a fact one of the lead forced place carriers, their largest client is Wells Fargo, JP Morgan Chase, Mr. Cooper, and Aquan. So if you have any of those, you already have a bank with a relationship.
Interesting.
And it's also doing the consumer a lot of good, because when you look at this, if they don't have any insurance because they can't afford it, now they owe the bank, and they're on the hook for the bank for hundreds of thousands of dollars because the loss is there. But if they had a forced place, it absorbs that loss to where everybody walk away, maybe not as happy, but you don't have that debt on top of your head.
Well, so yeah, what I was trying to get out of a bank person recently was, so does the premium for the forced place policy, it just gets added to the mortgage debt, right? So it just increases the amount of your indebtedness. It doesn't necessarily. So, but what I'm not sure about is, and I know I'm supposed to be on here as an expert, I just don't know the answer to this. Does it make it doesn't make your monthly mortgage payment go up, does it? Or does it make the mortgage last longer? No, it makes your mortgage price monthly go up. Okay.
Yes. It's almost like when you have a shortage in your escrow for example, if you have a shortage, what happens is they usually apply 13 months in advance towards that
Mhm,
escrow. And then, of
mhm.
course, it would send that note up, whether it's fixed or was it
Right,
a fixed
because they
rate or
can't
adjustable
extend
rate?
the term of the loan. That's
No,
it's either a
no.
right.
They just
They
layer
were
it on
just
top of your
increasing that.
payment.
Well, yeah, no, we United Policyholders got to do a survey on forced place premiums. We could work on that together.
We'd
That
love to.
sounds great.
I don't know
We'd love
how we'll get to those people, but we could do it with some of our lender friends.
Oh, we have a way. We have ways.
I believe
And
that.
we'll put it into a blog, so we'll draw that attention as
I
well.
believe that. I want to tease this out. It's very interesting because I have to say, like doing these webinars, we beat the bushes for there's all these non-admitted insurers now that you never
Right.
heard of, and
Right.
I worry about them. They're not protected by the insolvency fund. This kind of I'm intrigued by this concept, Corey.
Glad we brought that to the table.
Yeah.
Yep. They was pretty happy about that news yesterday as well, that there was another option. And again, fair plan is an option, but there is another option. It's good to have some options, better than no options at all. And
Yep.
it's bad. I can't, not speaking bad about them, but it does hurt our insureds who have these properties that just is not nearly enough coverage. I mean, it'll never add up.
Yeah. And
We're
I just went through. I just had did an interview last week with the Wall Street Journal, and she's asking me, for tips on bringing down your home insurance premium. And I'm like, well, this is a tough one now because we always used to say increase your deductible, right? But
Right.
if you live in Florida, you're already carrying a ridiculously high deductible, right? So that's not great advice. And then we say bundle. Okay, maybe if you can, it's still like maybe. But the thing I came up with, getting, if you don't have other structures, like if you don't have a garage, outbuildings, retaining wall, pool, whatever, you can ask if you can cut that coverage out of the policy. But of course, many insurers won't let you do that. They'll just say it's automatic.
right.
And my hunch is they don't pay. I mean, with the total losses, they pay on those, but with the average claims, they're not paying on those other structures very often. And so it's one of those things that helps them, they can charge a premium for something and they don't pay a
They
lot
don't
of claims
necessarily have
out.
to pay for sidewalks or the pool or the fence line if it's
Right,
just the house. Right. It's a
right,
savings.
right.
We are seeing something that we're going to mention here, and it only came up recently. We're seeing a big push now for the new platform. It's not a new platform, but it's a retooled platform called CoreLogic Symbility. CoreLogic
Symbility.
Symbility is coming on hard. There is going to be an announcement in January at CoreLogic's event in Los Angeles. They're announcing another top 10 tier carrier to take it on. So right now they have QBE, they have American Modern, and they have Liberty Mutual and Safeco. They
That
one
are
of the top
using it instead of
are
Exactware.
Exactware. Now,
Mhm.
we are seeing that there is a possibility of a top 10 carrier take this on, but now that we're talking about Fair Plan, it would not be out of the box for Fair Plan to announce we're going to adopt the use of Symbility. That is going to turn things around in a way that no one is predicting right now that could introduce this to a lot more carriers. Now, we're under the hood now with this. And quite honestly, I'm not too unfamiliar with this type of estimating program. I believe that it will be just as good as Exactware, but you got to know the program. It's
Right.
not the unit price, and that's the only unit price. What we're seeing is the unit price plus 10 other line items to make up the unit price. That's
Hmm.
how that program's built. It's very similar to Simsol. I'm
Hmm.
15 years using Simsol, and it's the same way. So as much as we're hearing about the terrors of CoreLogic's stability, I believe that it's going to be widespread use because the initial knee-jerk reaction is, oh my God, this is saving so much money. It's saving money because not many people understand how to use the program. That will be short-lived. That
Yeah.
will be short-lived, and we're on the front side of that. So I
Yep.
just saw that we're talking about Fair Plan, and I don't want to say it's not out of the box. So I think it's totally inside the box that they might be one of the top carriers that they're announcing for
Well,
January.
that again, Corey, you're on the cutting edge because it wouldn't surprise me. I mean, the Fair Plan is going to, just like they enthusiastically rolled out that smoke damage limitation, they're going to be, now that they have more policyholders, they're going to be looking for every way that they can to limit their claim costs, right? And because they're run by this governing board of insurance companies, they're going to be like, hey, let them be the guinea pig with the new software, and then we'll see how it plays out for them. And if we like it, we'll take it for our company, right?
Well, they've got a smoke matrix that I'm being told. They have a smoke matrix on how the adjuster is supposed to write their estimate, and they can only write their estimate within that smoke matrix. There is a matrix of how they assess how extensive the estimate is, and from what I'm being told directly by IAs is that we can't close our file and can't bill it until we rewrite the estimate to their liking.
Oh, wow.
Well, we definitely like to thank you again for joining us today, Amy. We can't wait to get into some topics that we really want to share with you that might be a great help to other people. One particular subject I think we would like to get involved when we bring you back is something that nobody's talking about, and that's those insurance guidelines that don't exist. Well, guess what? They exist.
Right.
And we got proof they exist. And that's why we go talk about it. And we go shock a lot of people when we talk about it, because those things like not giving directions is clearly directions.
Yeah.
And it's nothing you can really hide from, although they're still hiding from courts and, state and federal, telling them that it don't exist and telling us that it don't exist, and all the lawyers it don't exist. And guess what? It exists. So we like to thank you today. We definitely like to come back with that segment and get into that with you to kind of get your thoughts on it. And maybe we can move forward with making a change in that. So we appreciate it. And today we want to do something a little bit different before we sign off. Normally, Corey, I'll give a thought of the day, but I think this is a perfect opportunity for you to take that slot and give us your thought of the day, and then we'll sign off. So go for it. Tell us what you're thinking. What you want to leave with the people?
I'm going to say it's a bit of a jungle out there with the insurance claim process. If you have a major claim, so you want to make sure that you've got some help getting through, and the right help can make all the difference when you are navigating that foreign process. So, for the consumers out there, you're going to hire help. You make sure that it's people who have the heart and the mind and the expertise. Because it is a jungle out there.
So well said. And we really want to thank you, all our viewers. Please go to our website, to our left-hand link. There's a link that links you to uphelp.org. People, please support these people. Help them. Help us drive this cause home to help policyholders here all over the country. For at this point, Corey, you got anything to add?
No, we appreciate Amy being here, and always, Troy, we appreciate you.
Thank you. I'll be signing off. Troy Willis.
Corey Locke.
Amy Bach, thank you.
Thank you.
Thanks for listening to the Claims Underground podcast. We hope you enjoyed this segment. If you need more information on insurance policies, feel free to check out our website, www.claimsunderground.com. And remember, when the insurance companies won't pay, we're here to help. Until next time.